So I have to admit to having some butterflies this morning. And I'm not talking about butterfly wing doors either. These will be the ones in my stomach as this historic event countdown is into the hours. So the butterflies are also not being helped by another down day for the stock so far. I don't know about you, but I'm not a big fan of being wrong. It's never fun. Can you identify? Anyway, we'll see what happens. The fact that the stock is down this morning gives it a lot more room to run up after the event or not. Exciting times. But there are two anomalies in the market today, not just one. We'll talk about both. First of all, we're very concerned about Tesla, but the bigger anomaly is the overall stock market, which continues to charge ahead almost no matter what. While there's likely to be some sell-off today, and I'm seeing some sell-off today so far, I'm sure you are too, in the overall market, the miss on the CPI after the miss on the jobs data, the jobs, information last week, you'd think that the market would be at least taking a breather, but no, it just continues up and up. And I think there's every reason to believe that there is a chance that the Fed will have to back away from its 25 basis point cut in the Fed rate in November. Now, that would be a very big deal if that happens, but they can't ignore what's happening with the bonds, as the bonds now are up at 4.1. It's just impossible to ignore that. So will the Fed ignore it and go ahead with the 25 basis cut? For sure, if the numbers continue to be this hot, the December cut will definitely not happen. And 50 basis point cut in November, no, that's done. That's an impossibility at this point. So but the equity market seems to be blowing all that off. So to me, that's an anomaly. Anomaly number two. Yes, I'm eating crow. Tesla being down as it has been the last few days into these levels, shocking to me. I don't know exactly how to explain it. Yes, Elon has made these pronouncements before, and other people have made pronouncements about some major breakthrough in technology or major breakthrough in something else. I remember something years ago about a big a box of treasure, a box that had been unearthed or brought from the bottom of the sea or something, and they were going to open the treasury box. What was that? Was that Geraldo? Who was that opened the box to the fanfare was huge beforehand, and then it was a nothing burger. But if Elon delivers today, there's going to be, as I mentioned earlier, a lot of room for the stock to run because we've had this blow off going into the event. So those are two anomalies. I can't explain it. Maybe you can in the comments below. I'll admit that I won't be able to read those comments until probably Saturday because of all the activities I've got going on today, and then a wedding of my youngest daughter tomorrow. Well, not surprising. Not everyone is expecting Elon to deliver big tonight. There are many detractors, and many are pointing out how many times that Elon has promised and failed to deliver, specifically, on FSD, being complete. To give these folks their due on the skepticism, most of them have not driven a car with the current FSD. And if they had done so, I think they would be far less skeptical. I realized today that I have not said a single word about a potential van being unveiled today. I've talked about 14. I had the list of 14 yesterday, things that I think could happen that would move the market. I don't think adding a van would move the market. If it was a car and a van and the car was good looking and the van, I don't think it's going to be an additional help to moving the market on Friday or in the months ahead. But a van I think it's obviously a good idea to have a van in the Robotaxi fleet. I think it's a good idea to have a van in the general fleet being offered to just the regular folks. I don't think there's this much chance that the van is going to be, maybe it'll get a mention, but I don't think there's going to be a van that we're going to see in tonight's event. I think that would be very, very low likelihood. So that's what I think about a van. Mario Nothal reminds us of Elon's recent words. Elon said, "I'm a little optimistic, but if I wasn't, all of this would not exist." I so identify with him. Now, that doesn't mean that all true entrepreneurs are as optimistic as Elon or even as optimistic as Randy. But it's a general, in my travels over the years, most entrepreneurs, the really creative types, are very optimistic and generally speaking, way out, and often wrong. I mean, you make these bets, and some of them are not going to come true. If you make the bets big enough, many of them are not going to come true. Elon has a track record that says they come true, but they maybe come true later than expected. Yeah, he's got some stuff that's never happened. He's got some stuff that would almost qualify as failures, but in general, he hits it out of the park over and over and over and over again. So he went on to say, I don't have, he says, I don't have complete lack of self-awareness, said Elon. But if I wasn't optimistic, all this would not exist. This factory would not exist. Bradford Ferguson, another optimistic entrepreneurial type, he says the probability that Tesla reaches 100% unsupervised robotaxi anywhere in the US is not 100%. Well, of course not. Pierre Ferragu thinks the probability is only 10%, and he's a bull. If Elon Tesla can give the public more certainty into Tesla, in his opinion, Tesla will rocket higher. Clarity and certainty and confidence are key. It's always true for folks that are in the stock market. Well, this is Randy Kirk, and if you hadn't hit the like button yet, this would be that time. You got to remember to do that all the time because, it helps the algo and all that. And then subscribe and notify. This later today, I'm expecting to meet with Scott Walter, and I'm expecting to meet with Bradford Ferguson in person over there. I'm hoping to meet with a whole bunch of other folks that even though I'm not going into the event, I'm hoping to find a pre-party and a post-party and a viewing party and any other party that, might pop up. I've got all the feelers out to find out where those parties are taking place, but I have specific plans to meet with Scott and with Bradford. So I'm hoping to do videos with them and present those later today. But it's one of those days where I have no idea what's going to happen. So we'll see how that all plays out. And then Patreon, if you'd like to support the channel, that would be very, very helpful. The consumer price index for all urban consumers increased 0.2% after being expected to only be up 0.1%. This is, of course, on a seasonally adjusted basis. That was the same increases in August and July. And so therefore, if you extrapolate that for those 3 months, you would get to 2.4 for the year. And it turns out that, in fact, for the 12 months, it's 2.4%. And that is before seasonal adjustment. So I've never fully understood why the month is seasonally adjusted, but the 2.4 by the year is not seasonally adjusted. There's probably a reason for that. The index for shelter rose only 0.2%. That is a good number. The index for food increased 0.4%. Not a great number. And those two indices contribute over 75% of the monthly all items increase. The food at home index increased 0.4% in September. Food away from home, 0.3%. But of course, all of this was offset by energy falling 1.9% over the month after declining 0.8% the preceding month. So was energy really falling? You continue, though, to have these food prices and other prices, lots of other things going up a lot, like continuing with insurances, all kinds of insurances going up like crazy, in particular auto insurance. The index for all items less food, the core index here, the core index rose 0.3% in September because, you take out that energy number. Well, the rest of everything else went up a lot. And that's what it went up the previous month. So now we'd be looking at a 3.6. Well, yeah, if you take out all that stuff, it ended up at 3.4. I think we'll get to that number in a minute. 3.3, I think. Okay. But things which increased in September were shelter, motor vehicle insurance, medical care, apparel, and airline fares, interestingly, going into the fall. The indices for recreation and communication were among those that decreased in the month. All items index rose 2.4 for the 12 months ending September. That's the all items, but the all items less food and energy, the core, rose 3.3% over the last 12 months. The energy index decreased 6.8 from the 12 months, including September, and the food index over that full year was up 2.3%. Now, this is not a horrible CPI, but it's not the directionality that the Fed was expecting. It's not the directionality that the markets have been expecting. It's going in the wrong direction, and therefore you would expect the markets to be selling off this morning, especially after those crazy jobs numbers last week. All right, well, here's the jobs numbers for today. So this is initial unemployment numbers. In the week ending October 5th, the advanced figure for seasonally adjusted initial claims was 258,000, an increase of 33,000 from the previous week's unrevised level of 225, which was kind of normal. This is the highest level for initial claims since August 5, 2023, when it was 258. And the 4-week moving average was 231. That's an increase of 6,750. Now, this is probably being at least a little bit affected by Helene. Helene, the first hurricane in this series of two, Helene or Helene, I'm not sure how it's pronounced, because I've heard it both ways now. But whichever way it's pronounced, it probably did impact these jobs numbers at least a little bit. The total number, this is the one I always look at as I think the more important one, the total number of continued weeks claimed for benefits in all programs ending September 21 was 1,637. That's a decrease. So that would suggest people not having that much trouble finding a job after they're laid off. So that would be an indicator of a better economy. It'd be an indicator that the jobs situation is not that bad out there. And yet we're hearing other things, other ways. We'll be talking about that in a second. So the anomaly around the equity markets going even higher in spite of these negatives might be explained by the growing evidence that Trump will win, or at least some are claiming that. The evidence that Trump will win is that the betting markets have gone from +6 for Kamala to +6 for Trump over the last 2.5 weeks. So that's a pretty significant switch. That's based on the combination of betting markets report that is put out by Real Clear Politics. Many people believe that Trump will be better for the economy because of cutting regulations, cutting taxes, as opposed to Kamala, who would probably increase regulations and increase taxes that would not be good for business. That's the analysis. That's not the political positioning. That's just the analysis that most pundits take. So, okay, let's add to the fun this morning. 𝐄𝐦𝐚𝐲 has this. You know how much I appreciate his analysis. He says, and of course, I really appreciate it when he's agreeing with me like today. Breaking U.S. small business owners' uncertainty around business conditions spiked to 103 points in September, the highest reading on record. We talked about that on Tuesday. The NFIB uncertainty index has almost doubled in 2 years. The indicator has now exceeded the 2020 pandemic levels when the economy was in lockdown. Inflation, elevated interest rates, falling earnings, and election uncertainty all make a tough environment for small businesses to successfully operate. As a result, business owner investment plans are at their lowest since the pandemic. He says, and commonly I don't agree with his eventual analysis, he says small businesses are in recession. And I'm telling you, small businesses are in recession. Barron's adds to this by saying the call for the Fed to revise its script has translated into stomach churning. Oh yeah, the butterflies again. Stomach churning moves in the bond market. Yields on both the 10-year and the 2-year government bonds have risen over the 4% level, and the benchmark curve defined as the difference in yields between the 2 and the 10 fell to negative levels briefly Monday morning, meaning that a short-term note offered more returns than long-term. We mentioned that a couple of days ago. I think it was when Larry was on. It was just for a fleeting moment that it reinverted, but this is driving people crazy as to what's going on. The 2-year is more sensitive to Fed policy hence the move to levels not seen since August 22, making sense since expectations for rates to stay higher for longer. But yields on 10 years have reached their highest level since July because the market now estimates that the lowest point for the Fed funds is going to be 3.25, up from the 3% and higher than the Fed's own estimate of 2.875. This higher terminal rate for higher long-term yields, compensating for the increased interest rate risk. Plus, bond investors are sniffing out the attack on predictability and confidence in the policy path. Suddenly, the bond market has lost not only the assertiveness, but has moved above the Fed's dot plots. Hence, the extent of the overshoot in yields that is underway, according to Rosenberg Research, David Rosenberg. The magnitude of the bond market's move in the face of one data point last Friday has been extreme, however. The iShares 20-plus year Treasury bond ETF dropped 0.7 on Monday, and the selling spilled over into stocks with the S&P off 1% then, not now. Gamana forecasts that the 10-year will move back down to 3.75 by year end and stay on that level next year. 3.75. Who is always talking about 3.75? In his forecast is right that investors buying that maturity now will enjoy an increase in the price of bonds. They'll get a gain because of that change. To be sure, there's a case for yields to rise, especially if the Federal Open Market Committee decides to skip lowering rates in a meeting or two as the path forward to neutral rates. This could happen. It's still unlikely that November will see a no cut, but it's certainly possible. And we're going to be looking at those PCE numbers really hard when they come out. And of course, you got PPI tomorrow. PPI and PCE is the most important, and the PPI contributes to that report. So that's why it'll be important to watch that tomorrow. The current levels on the 10-year are still a good entry point for investors. This is not investment advice, except by them, who were considering buying that note when it closed at 3.6. It's 15-month low. So people that bought at 3.6 are getting killed right now. No one should confuse what's available now with the highest yield possible. NatAlliance Security, Andrew Brenner notes, but buying 2-year and 10-year treasuries when yields are above 4% is where it may make sense to start accumulating bonds. The reason? The Fed is likely to continue lowering rates, even if it's just at a slower pace. Okay, a couple of quick things. Yes, I think inflation is still probably headed down. Kathy Wood believes inflation is definitely headed down. Could we, though, have another 3, 4, 5 months where we don't get that situation happening? And that would be mostly because of wage inflation. So the wages are up 4% year over year, continue to be at those levels. It makes it very hard for overall prices to come down because the business owners have to get that 4% into the price of the goods and services that they're providing. So, but long term, as productivity comes into play, this is, of course, what I've talked about for a long time. I've been expecting productivity to be much more successful at driving down prices, but so far it's not having that big impact. My great worry is that I believe oil will continue down, but it doesn't have to. There's lots of reasons why it wouldn't. But other commodities now are starting to tick up. If you get commodities ticking up and wages going up, you pretty much have no choice but to see prices going up because the folks are not going to cut their earnings that much. They're going to continue to try to pass those price increases along. So, having said all that, where is Tesla and where are the markets now? And the Tesla story continues to be an anomaly at 4.79 down this morning, hitting 236.26. That is a few points away from 265. Okay, that's 29 points away from 265, but it is popping up. It is trying to go green. It's now only at $2.49 down because my app took a while to refresh there. The Dow Jones is down 109. That makes sense, although I would think it might be down more. NASDAQ down 37. Again, it's directionally right, but the number, anyway, surprising to me. S&P down 13. We got the Magnificent Seven completely mixed. NVIDIA up, Microsoft and Meta down, Amazon and Google up, and Apple down. None of these moves are huge, but generally speaking, as I mentioned, quite mixed. Then we've got the Cathie Woods are primarily down, TDOC and Square up, but the rest are down. So there you go. That's where we are on the markets right now. Percentage-wise, that would be the Dow down only 0.27%, NASDAQ down 0.19%, and the S&P down 0.22%. Look at that. That's, again, unusual to see them all kind of in sync this morning. And Tesla continuing $2.54 right now, and that's about 4%. All right, let's go ahead. 4%. Did I say 4%? I'm very sorry. That was incorrect. Okay, let me go back. That was a brain aneurysm. I don't know what happened right there. 1%. Yes. All right, let's go ahead and take a look at those bonds. Oh boy, I got a mess here. So sorry. Got to go back out. Go here. Go here. Okay, there we go. Now we got it. So bonds up. 10-year is up 2.7%. I mean, this is just nutty. Up at, okay, not quite 4.1, 4.092, but almost 4.1% on the 10-year. You have got the 2-year at 3.984, so not quite above 4%, but again, it's very close, but at least the 2-year is down 3.5 basis points, while the 10-year is up 2.5. So that at least broadening that yield difference. And the 3-month is unchanged. The 2-month is down 0.9 basis points. So a very mixed situation here in the bonds, with the shorter term bonds acting more as expected. The 10-year being up 2.3% this morning is just 2.3, basis points this morning is crazy to me. Okay, let's go take a look at what's happening to oil. Oil is up again to $1.79 for Texas, $1.93 for Brent. We're looking at $75 for Texas and $78.53 for Brent. Natural gas down this morning, 2.638. That's down 0.83. Gold is extending its gains this morning, up $18 to 2,644, but that's still, down quite a bit from its all-time high. Silver regaining some of its losses yesterday, up 1.70% at 31.19, and copper also returning to green territory, up 0.77%, $4.43. The dollar down against the yen 0.45 and down against the euro 0.21, and Bitcoin down 354 at 60,646. The trend there would suggest it's going to go back into the 50s shortly. Okay, there you have it. That's what the markets are doing. As mentioned, my day today is supposed to be about Scott Walter. I'll be meeting with him, I think, around 1 o'clock, and meeting with Bradford around 4 o'clock California time, shooting videos, putting those videos up. We'll see if that happens. Something's going to happen. I'm going to have to shoot videos. I'm going to have to tell you what I'm learning out there in the real world, where I'll be, moving around among the folks, checking opinions and finding out what folks think is going to happen. And then afterwards, not sure what I'm going to do. Sometime around 8:30, 8:15, 8:30, when the event is over, hopefully I'll be with a bunch of folks to get some opinions, get some feedback. Maybe I'll do a quick videos then, but I'll give you the detailed analysis tomorrow morning, when we'll actually be able to see how the market reacted to the event. And who knows what we'll find out tomorrow. Okay, just one last look at Tesla before. Yep, down 3 now, starting to break over onto the red side again. I don't know. I can't explain it. I try to explain it, but most of the time I feel like I'm explaining it with some intelligence. But today, I don't know. I can't. I'm done. And when I'm done, I have to find this little. Yeah, there it is. Okay, it's been great talking to you.